Hey everybody, Preston Brent here with our Trader User Group, a weekly roundup for the week ending August 21st, 2015. Boy, what a week. I've got on the screen here the E-mini S&P 500 futures. You can see these big red candlesticks as we just fell off the table. Now, this past week we broke a lot of records. We broke a lot of technical price levels, support levels. We broke a lot of things, and I'm sure a lot of people ended up breaking their accounts. The S&P 500 for the entire week, I think about 1.1 trillion dollars in market cap was wiped off the stock market, the S&P 500, just in this one week. And the other thing that was really amazing is the VIX um, had the biggest weekly percentage increase ever in the history of the VIX. It moved up 120%. I mean, just really amazing. Um, there was clearly a lot of fear in the marketplace. Now, I find it very fascinating that when I look at the TV talking heads in the papers, they always try and explain what happened because it's human nature. You want to know why something's happened, but you can always find a reason for everything. And a lot of people are pretty much blaming it on the Chinese economic growth as being very weak, which contributes to a slump in commodities, which contributes to a slump in countries dependent on commodity exports. And China also at the same time devalued their yuan. The IMF did not allow China into the reserve currency status worldwide this year. They said they're going to postpone it. So that further devalued the yuan. So over a 3 or 4 day period, the yuan continued to go down, and then that causes a lot of contagion in other Asian countries um, where they may want to devalue their currencies as well. So that just causes more turmoil. And then, here at home in the United States, we have the Fed's interest rate potential hike. Maybe yes, maybe not. Was looking for September, now maybe December, and now there's talk that they may move it out to next year. I've even seen talk where someone's talking about doing another QE, make it QE4, quantitative easing 4. Crazy, really crazy stuff. Now, the one thing I will note, and you may have just not have really even thought about it, but the Feds here in the United States stopped their stimulus in October of last year. And if you look at where the equity markets have moved since then, they haven't really gone anywhere. And what that tells me is that the markets without stimulus, there's not enough strength to really move them higher, which tells me in the United States that the global economies are just not as strong as they used to be. It's just really not strong at all. And this week we've seen finally a little bit of a capitulation in the markets and giving it all up in one week. I mean, even the Dow, the S&P lost 1.1 trillion in market cap. The Dow had the biggest weekly loss since the financial crisis in 2008. I think the Dow dropped over 1,000 points this week, 1,017 and some change, over 5.8% just for the week. Now, the biggest loss ever in the Dow for a given week was the Lehman Brothers scare back in week ending October 10th, 2008, I believe. And I was short Lehman at the time, so I was loving it. But the Dow dropped 18%. But this was a huge move all across the board, no doubt about it. And if you're in the markets, you probably suffered some losses. Now, our group, as you can see on this screen right here, I've been telling our group for quite some time that we're going to have a little bit of a pullback. And when I said a little bit, I said the risk of an upside movement is 1 to 2%, risk of a downside movement anywhere from 10 to 15%. And I have our levels here, and you could see the thing that I was pointing out to our members is, and you never really know just what the extent of a move is going to be. You know it's coming, or at least we knew it was coming, but I didn't know the extent. You can see this bearish divergence in the RSI as we've constantly made higher highs. And then right at this point here, when we were at 2134, we were just making these, lower highs in the RSI. Same thing with the MACD. It looked the same on the MACD. I've got an oscillator. They all look the same across all indexes. I said we're starting to get into some trouble, and we broke this upslope and channel here, and we came down did a test and then moved back up. I said, okay, and then we did not take out the new highs. I said, okay, that's pretty much it. We're going to find a roll. I just don't know where we're going to go. And I had established some levels down here of where we can go. And now we're sitting right in this wide zone here, which was kind of like my point of last resistance. Should that break, we're going to come down to 1813. And that may be where we end up anyway over the next 4 to 8 weeks, let's say. Okay. With this kind of drop like this, I would not be surprised at all to see a little bit of a counter trend move up into this area right here, and then a little bit of a jagged roll back down, and then we'll assume another channel as we work our way back down again. Would not surprise me at all, at the least, right? Now, so again, our members, we knew about this, and we were starting to add puts. We were starting to add, I was going short the E-minis, picking up puts in the SPX. There were other trades that were more volatility expansion trades because volatility was relatively low at the time. In fact, if we look at vol here for a second, you can see that we were down in this area at the bottom down here, and we were just getting all that bearish divergence. I mean, it just really just did not look nice at all. All this bearish divergence. As we were down here, the markets were giving me the bearish divergence, and I said, okay, I thought we would probably see this area right here back up to 18 or 19. Now, I didn't predict this, obviously, but I did predict we'd probably come back up into this area. And sure enough, we did. We came right back up there, and I said, okay, now we'll probably challenge this area here, and we may get a little bit of a spike and roll back over. But we just had almost like a capitulation day on Friday, and then boom, right here. Now, the other thing I want you to look at on this VIX, let me just clear it up and I'll show you here. Some people would miss it unless you're really paying attention. If you look generally, right here, we closed at the highs, right? But over here, if you look at the VIX, you will see there's hair on the head, meaning we moved up, but intraday we moved back down in the VIX. Here we closed right at the high. All right. I mean, the volatility popped all the way at the end, and then it popped again. And at one point, we were actually down around 20 in the VIX during the day. And then boom, we moved all the way back up, and we closed at 2803. Right. So we actually took that area out, and we just moved up 8 points, 8 more points. For the day, the VIX was up 46.45%. And as I said, for the week, the VIX had the biggest move volatility-wise ever. For the entire week, the VIX moved 120%. So it moved more than double in the week. I mean, it just took off, right? We were down at this area down here around, call it 13. We finished the week at 28. That's more than a double, about 120%. Huge move. Now, I will tell you that volatility is a mean reverting animal, so we can expect vol to get very choppy. You can see when we get up in these peaks, vol gets choppy, right? And it just does not stay here. It's not like a stock. So, and that choppiness, which brings it back down into this area here, which would not surprise me, means we're going to get a big bounce in the equity market. But I would not be surprised to see vol pop back up and actually challenge this area up here and go even higher before we finally see a rest to this area here. All right, and it's going to take that kind of move to really get this market back in line again. So, and they, again, if I go back to the E-minis, you're going to see here it fell 57.25 points. You can see this blue dash line, which is the opening price of the E-minis for the year, 2055, right on here. You can see this red dashed line. We took out the prior lows for 2015. Now we're at 1968. Pretty much the lows made on the E-mini here. And you can see the high at 2134. So we've gone from the high to the low, and we've had a pretty good little pullback, you know, in the E-minis. I do believe we can probably take it another 5 or 6%. So if I put it back on a weekly, I'm going to leave these price levels on here. You're going to be able to see just what I'm referring to here. Even on now on a weekly chart, the other thing I wanted to point out here um, is, oh, let me just get my pin set up here. Here we go. So that's good. So if we look at the weekly chart, you can see this area here, 1813, and I pointed it out on the daily too. That's where we made the low back in October of last year, okay? And volatility, I'll show you the VIX. It went up a little bit higher than where we are now, but it didn't stay up there very long. It gave us a V bottom, just like that. Um, I'm not sure if we're going to get that kind of V bottom right here. I think what this time is going to give us a little bit more of a choppy, longer consolidation period. You can see the RSI did not go down as low as we are right now. So this was a huge, huge sell-off. In fact, the weekly move here is a lot bigger than the weekly move here, even though on a percentage basis, this was 10%. And we're around 6% now. So we got, if we come down and make it here, this will give us about 10% right in this area right there off these highs up there, okay? So that would give us that move that I'm looking at. And I had said anywhere from 10 to 15% move. So I would expect a little bit of a counter trend rally and then a little bit of a roll down, and then let's just kind of give it up, kind of a capitulation type move. That would be the way I would see this this move unfolding here. Okay, so this is the weekly chart of the E-mini S&P. Now, so we're well in the red for the year. If we look at the Dow, it's even in worse shape. You can see we made new lows for the year in the Dow. You can see the daily, we're way oversold here. You can see just how we've been moving down. But again, we saw this thing coming. You can see as I move this down, you can see the bearish divergence in the RSI. So this was not a surprise for our group. And for those that decided to take advantage of it by starting to load up on some puts and some hedges here, take some profits a little bit earlier, you still lost money here if you were in some trades just because of the rise in volatility and the way the markets reacted. But it could have been a lot worse. You could have given up 40, 50% of your portfolio in this area here. So I would say good traders probably gave up 5 to 10%, maybe a little bit more than that, but not much. But we're able to make some good money on the downside. So when we do have this move up, what I'm going to suggest to people is that in any counter trend move, you start to kind of rebalance your portfolio for more chop over the next couple of months. That's what I'm going to do. Now, for our members, we got a session tomorrow night, and we'll go into the details on, when are we on a buy the dip or sell the rally kind of mode. We'll go into the details on that. But for now, we can expect a little bit of a bounce, maybe a little bit of a momentum move down and then a bounce back up. But this is kind of where we're sitting. I had to laugh a little bit. I saw typically when you have these big moves down, it happens every single time you get headline prints where some people say, well, the Dow's going to go down to 5,000 or 8,000, or it's going to go worse than the lows of 2008. You get all this stuff. And all someone has to do, and it's really interesting, all someone has to do is make the prediction and then it comes right, and that's the only time they've ever been right. But then they get a lot of headline news. It sells books, it sells papers, it sells subscriptions, all that crap. But they're only been right once in their life, but they just happen to get one right. So a lot of people will take these gambits and say that. I would not believe them. Okay, don't even believe what you see on TV because they're going to try and explain away this stuff. All we got to do is follow the price action here. If you're not a member, I highly encourage you to come on over because it's times like this that you would have been prepared for this kind of move. Okay, now I didn't expect it to fall this fast, this deep. So that's what causes some of the losses, but that's okay. We know where the markets are going to head, and even if they go lower, we're going to be better positioned for it than everybody else. And then next 2, 3, 4 years from now, this will be just a distant memory and just say, hey, remember when? And then, we're back where we were 3, 4 years later, maybe a lot higher, maybe flat, sideways, but we're going to trade it and make some money on it. So this is the Dow. Again, well below the opening price of 17,781, the Dow futures. If we look at the Russell yesterday, very interesting. It was actually in the green for part of the day. It was amazing. In the afternoon, the Russell was up a couple of points. And you can see here the Russell has not made new lows for the year. So the Russell actually held up Now, what does that mean? That means that small and mid cap stocks, there was some money going in there because there's money that's been on the sidelines that hadn't participated in the past couple of years move up. So there's a lot of money waiting to get in. And a lot of people have been waiting for a pullback just to get into the market. So we may see money starting to be strategically deployed in small and mid cap, which is why the Russell is not making new lows right now for the year. You can see the opening price of the Russell, 1203.90, and now we're. This is why I believe that this tells me that the end is near for this near-term down move. Otherwise, the Russell would be giving up a lot more. It's kind of a fear gauge with the Russell. And then if we look at NASDAQ, unbelievable 2 bad days. We actually went into the red in NASDAQ. NASDAQ was the last holdout in the markets. That's where, and I had been telling our members the breadth underneath the NASDAQ, the Dow, the E-minis, the percentage of stocks above their 20 EMA and above their 50 EMA. We had bearish divergence on those too. We were going through those charts. So we were prepared for this. NASDAQ was a good short. Probably it gave it up a lot more. As you can see here, we're now underwater in the NASDAQ, but you can see we're still well above the lows for the year for NASDAQ. So just like the E-minis, I will suspect the more likely action will be a move from in this area here back up, test the opening price, maybe even a little bit higher, maybe up to here, and then a roll back over like this, and we'll probably come down and test this zone here, which is just north of the lows for the year. Now, if it gets very ugly, we may come down in this area here, and then we'll have this stabilization period. I don't believe we'll have like we had in October of last year, and this was with all indexes. October of last year. I'll show you on the chart here. You can see this huge spike. Okay. You can see this huge rollover, spike down, spike up. I mean, that was just, it happened and it was over with before you even knew it. If you'd gone on vacation and come back a week later, you'd never know we did this spike, but it's very ugly. I don't think we're going to get that this time. And by the way, this move was a very violent move. Volatility is a lot higher. It does not look violent, but it was on a percentage basis and moving based on where the indexes were at the time. It was a violent move. So if we come back over here and take a look at the current price, you can see just how violent this move was. Ugly, ugly, ugly. The other thing that was giving us some heads up is the Dow Jones Transports that we were watching. Check this out, guys. We actually had a little bit of a bounce here as a head fake, and we were watching this, and this is where we started, and I started pointing out to our folks. All the way back here in March, we started making lower highs following this trend line all the way down, right? And meanwhile, the equity markets were moving up like this as the Dow Jones Transports were moving straight down. The Dow started to give it up first because of the transports. And then the other indexes followed except for NASDAQ. It was a holdout, but the breadth underneath NASDAQ was very weak. So again, we were hedging our bets with puts and doing what we needed to do, taking profits earlier, making those kind of trades. And then we had this break here. And it was a little bit of a false break because if you looked at when we did break out of the Dow, our transports, the rest of the equity markets were flat. They were like this or barely up. And I said, okay, that's not right. And then we quickly gave it up. And now we made new lows in the Dow transports for the year at 141.27. Okay, so again, we had another heads up before everything started falling that this thing is not right. There's something not right with the market. All right, so there were if you knew where to look, there were places to go and things to do and trades to take. Right, and the other final area that just said, you know, something's wrong with the markets is the bond market. The bond market generally knows all. And if you look at the bond market on a daily basis or on this daily chart here, you can see here that really starting in July, the bond market has been on a tear. Money was slowly going into the bond market. We took out that prior pivot high. That was warning number one. And then we took out that prior pivot high. That was warning number two. And then we finally, after this first warning and the second warning, bonds up in this area here, we finally gave it up. The markets gave it up. And money had been, coming into the bond market from over in the UK, over in Japan, right? Money was flowing in here, Asian markets, other Asian markets besides Japan. Money was propping this up. Now, I will tell you that the bond market is setting up for another bubble. We were in a bubble area here, and we traded this all the way to the downside. It's going to happen again. Not right now, but when we get the signal, we're going to take it, and we're going to come down and break this upslope and trend line right here. So that's kind of where the bond market is sitting right now. So, guys, we had a lot of warnings that the market is just ripe for a fall. I didn't really care what the TV talking heads were saying. Everything was set up that way. I'm not going to go into the currencies, but we got our favorites there. Or the metals market, we got our favorites there. Oil, I will show with our group this weekend. Oil is coming right down to my stated objective here. We love trading oil. You can trade XLE, you can trade USO, or you could trade oil futures, or you could trade just the refiners. And you can see my target is right in this area here, which is around 38 a barrel. We got short oil right there, riding it down. I've been in and out a couple of times on short oil futures, but it's moved down about $17 a barrel, and it's $1,000 a barrel profit in the oil futures market. XLE, all commodities are just being killed with China. And we've been playing it, right? I mean, we've been playing the whole time. And I've got trades on in oil even as we speak right now. I've got trades on in oil. Our members, a lot of our members are taking these trades and loving it. So we've got oil trades, we got natural gas trades. We're getting into a seasonality side. We've also had a disparity. I don't know if that's a word. Disparity between gasoline prices and oil prices. Gasoline prices have not fallen as much as the oil prices have fallen. So you've got oil just stacked up. There's no place to store it. Refiners who take oil and refine it into gasoline, they're able to buy oil cheap, sell gasoline a little bit more expensive. So refiners have done very well. Even though they're in the oil patch, a lot of people think, well, gee, if I invest in the oil patch, all companies are bad, right? Well, not really. Refiners are doing very well. And we've had a couple of refiners that I pointed out to our members that have just been great trades, taking advantage of this wide disparity between gas and oil. So again, if you're not a member of our group, I highly encourage you to come over because it's days like this or weeks like this that our annual fee is very low. I keep it low because I make my money trading rather than running a trading service, but I do like having folks in here. So I'd highly recommend you check us out. The other great trade we had was I've been talking about China being bubblicious since January of this year. You can see China just giving it up through the proxy that most traders here in the U.S. would trade as FXI. We got short FXI way up in this area here, traded it all the way down, and as we had this counter trend move here, I got out, took profits. So I've captured about 70% of the profits in this move, which is what I try and do in a big trend. You want to capture about 70%. You can see we're now down at another key support point right there. Let me just put it on a weekly just to show you. This is where we're sitting right here. Look at what China did. I mean, it's just, it's ugly. We've given it all up right here. A little bit of a counter trend move, then here we go. We went from down here to down this area here. I think China is going to work its way down and test these lows down here around 32. But these big moves here, just like the U.S. equity markets, expect a little bit of a counter trend rally and then catch it on the roll, which I'll point out with our members that we'll be able to do. A lot of other emerging market countries are really just getting killed right now. So if we look at like just the emerging markets, look at that, just ugly emerging market move here. Okay. Now there are some ETFs and stocks that are really good companies that just got really killed. These are going to be worthy of us coming in and taking a position and either selling puts underneath because we got high premiums in the options, or picking them up at a cheap price. And then holding on to them. So anyway, guys, I wanted to give you this quick update on the markets. What do we expect for next week? I would anticipate a little bit of a bounce. That would be normal, right? After this big move down, that would be a normal expectation. I think momentum, remember this was an option expiry week, but no one really knew that just because of the big move that we had. This is weekly bars. So typically what I've seen in moves like this is that we'll get a counter trend move to anywhere from a Fibonacci node of about 38% to 50% of this total weekly move back to the upside, right? So and a big drop in volatility. So you know, we'll probably get into some kind of mode where we settle here. Odds favor a little bit of a move right here, either 38% extension off the lows here on the fib node, somewhere in that area there, or somewhere up here a 50% extension, and then we're going to run into trouble, a little bit of consolidation, and then we're going to roll back over again. So if we do get this move and you really got decimated, use this move up to kind of rebalance your portfolio, because if it does roll back over, it's going to get uglier than it did this Thursday and Friday. Not by maybe the daily move. It'll probably grind down, much like this grind down right there. An orderly move down is okay. It's easy for most normal traders to handle. But a big move like we had over this past week, most traders aren't set up for that kind of move. So you're going to but don't panic and sell everything. Even if we start off tomorrow with a downside move and then we start to move back higher mid-morning later in the day. And we may have another hard down day before we kind of arrest this move and start moving back up. So I can't tell you what it's going to do, but I can tell you that probability-wise, we can in favor a little bit of a bounce, okay? So that's kind of where we're sitting right now in these markets. So everybody, I hope you've enjoyed our session and my advertising here for, by the way, Mulholland does great bags. Great handbags and travel suitcases. But anyway, I hope you enjoyed our session. And if you're not a member, I would highly encourage you to come on in and check us out. Otherwise, members, I will see you Sunday night at 8 p.m. New York City time, and we'll look at the markets coming up and how the markets open Sunday night. All right? Take care, everybody. Ciao.